gold-silver ratio, the first thing we need to clarify is which specific ratio we're talking about. Within the Earth, silver is 19 times more prevalent than gold. However, when it comes to extracting the metals, 9 times more silver is mined than gold. Now, these ratios are relatively static, but when it comes to pricing, two ratios exist, and these are actually dynamic. The physical price ratio is currently around 55. But of course, when people are talking about the gold-silver ratio, they're usually referring to the paper price ratio, which is currently around 66. And it's this ratio that I'm going to be discussing here.
Basically, 2020 was quite exceptional. If we look at the average, if we look at just demand, and we look at the average for 2010, for the period between 2010 and 2019, you will notice that basically around 50% of demand for gold was jewelry. Because of COVID and all the lockdowns, that demand dropped to 38% in 2020. Same could be said with technology. It dropped from 12% to 8%, and to a lesser extent also central banks. Basically, central banks, demand from central bank dropped as they had, let's say, more important things to deal with. And with all the stimuluses, could hardly justify adding more gold into their reserves. You also had Russia, which stopped purchasing gold. So all in all, demand for gold in 2020 dropped by around 15% compared to the 9-year average.
And if you look at the COMEX website, if you look at their disclosures, if you look at what it means to take delivery, a key point is that taking delivery doesn't mean what most people think it means. It does not mean showing up at the COMEX and taking your 1,000-ounce bars or your 5,000-ounce bars. It can mean that, but it doesn't have to. Taking delivery means taking delivery of the contract, the futures contract, or the warehouse receipt that backs, that futures contract. It doesn't necessarily mean showing up with the truck and taking the silver away from the COMEX. Now, if you own that warehouse receipt, you have the right to do that. So taking delivery can lead to physical removal of silver from the COMEX, but it doesn't have to. So a lot of people make a big deal about all this standing for delivery on the COMEX, and I think that's significant. It's interesting that more people are taking delivery of those warehouse receipts. That means at the very least, they're considering their options as opposed to just rolling the contract over, the futures contract into another futures contract, into another futures contract, and so on.
So I think we're all aware that, one of the most significant industrial applications for silver is its use in solar panel and specifically photovoltaic cells, which are really the building blocks for solar energy. We project that this is going to remain an important and consistent source of industrial demand for silver going forward, especially throughout the next 10 years, and it will underscore silver's role as a green metal. We think, based on our report that we put out last year and some forward thinking that we put out in February of this year, that solar power generation is going to nearly double by 2025. It'll continue to be a vital point. Silver will be a vital component of PV cells, and we look forward to monitoring that market and watching the growth as it occurs throughout the years.
All the presentations were fantastic, and I did have a follow-up question for Diora on the gold-silver ratio. What do you think the trend is going to be specifically for 2021 for that ratio?
Okay, so that's actually quite a short time frame. So I would expect it, because we've dipped into that between the floor to roof area. I think we're going to stay within around the 50 to 70 area. Just because it's such a short time frame.
One of the things I was interested in was the bond rates. I know that we hit 1.7% on the benchmark 10-year treasury. We're down in the 1.6 range. Do you think that this is possibly indicating expected inflation? And if so, how do you think that'll affect the precious metals markets?
Well, do I think it's possibly? No, I think it is. It's clear. The so-called bond vigilantes are telling the Fed, they're calling BS. They're saying, we don't believe you. That we're not willing to hold these bonds. Now, it's important to understand that they're not actually trying to send bond yields higher. It's not like, oh, we're going to school the Fed and we're going to send rates higher than they want. It's people who own bonds saying, I don't want to own these with inflation going higher. If especially if the Fed's going to have to step in, right, and they're going to sell bonds to push rates down.
I did have a follow-up for you, Bernard. What are your thoughts overall on the bond market and potentially its effect on the gold sector and the silver sector?
Yeah, I think what will be interesting going forward is the market starting to price in or not it's Biden a green infrastructure plan. I think that's going to be the next fixation, if you want, of the market. Mm-hmm. It's interesting because the last time it happened, we saw it with Trump back in the day, and it did have an impact not just on gold, but also on base metals.
What do you see as the main driver for demand for silver for 2021? Do you think the investment demand is going to, for the first time in the last few years, outpace industrial demand, or what are you seeing in your data and in your studies?
We do project a very strong increase in industrial demand, really going up to about a 6-year high of about 1,000,025 ounces. And like I said, that'll post a 6-year high. But the interesting dynamic that we're seeing, at least in the first quarter of this year, is the price is holding its own. I mean, the average price of silver through today, based on the London fix, is about $26.37 and 37 cents an ounce. And we project that the average price this year for silver, along with our consultants at Metals Focus, to be around $30 per ounce. So that means there's a longer runway for silver based on that figure in the second half of the year in order to get to $30.
I agree with Diora when she talked about the correlation between gold and silver. And there's this, it's almost fashionable now to talk about silver's industrial use so much, to say, oh, it's not a monetary metal. Governments don't hoard it anymore. It's not used for coinage anymore. It's just another industrial metal. And if you look at the price action in the markets, as Diora showed us, it's simply not true. Yes, it is driven. Silver has this other industrial aspect, but on a day-to-day basis, on a year-to-year basis, overall, the correlation is very high. It moves with gold as a monetary metal. So, is the bottom in? That's a tough.
It's one of the very interesting things when you look at charts, both inflation adjusted or with current prices. Silver is one of those rare things where it's way cheaper than it was back in 1980. It's very hard to think of any other thing that is actually that cheap, and it's even worse when it's inflation adjusted. So when all this money printing seeps out from its sequestered, at the moment it's all sequestered in stocks and real estate, as we've already heard, but when it seeps out into the retail area, I think silver could easily reach triple digits.
The retail demand for silver is quite strong throughout the world. And if you just take the United States for an example, it's really hard to get your hands on physical silver with respect to bullion coins, bullion bars, and so forth.
The other thing I would caution about is that with this whole green stimulus, green economy, it's coming out, there's going to be a lot of demand for copper, and a lot of silver is actually a byproduct. So we might find ourselves with more silver in the market coming in. It's almost free of charge for the copper producers to come out with it. So there is also that side of the risk element that one shouldn't forget.